So I've been following uranium for more like 16 years at this point. And from 2009 till 2019, I followed the uranium space, but never made any investments in uranium. And I never made any investments because I didn't find the macro story to be sufficient to make an equity investment. So our research indicates that at any given time, and it depends on the company, only about 50% of a commodity producer's equity performance arises from commodity price appreciation. The other 50% is explained by any number of variables, many of which are sort of fundamental company decisions. Also, those 50%, if you will, that rarely both happen at the same time. So in some years, commodity price moves the equity. In other years, favorable or not favorable, sort of fundamental issues move the equity. Very rarely do you get both occurring at the same time. Now, when you get both occurring at the same time to the downside, you get a vicious sell-off. When they both occur to the upside, you get a fairly significant rise above the fundamental value of the company. Now, what's also important to recognize here is that the part of the reason we have chosen as a firm to focus on these bold equity bets with timid macro forecasts is because commodity producers have a nasty asymmetry in their response to commodity price movement. And ideally, when investing, we want to always have sort of a very nice positive asymmetry in the return for catalysts, for variables that are moving the stock. And even though we focus on fundamentals, we can't dismiss the commodity price. And what ends up happening is that the beta or sensitivity of commodity producers to underlying commodities is much nastier to the downside. So if a commodity goes up, the stock will go up. Maybe it'll go up, when a commodity goes up 10%, maybe the stock goes up 20%. But if the commodity goes down 10%, the stock will go down 30 or 40%. And that's because there's a fixed asset base with fixed costs. And so there's a nasty asymmetry. And so when you create a portfolio that has a really high commodity price beta, which is to say, timid equity bets with a bold macro forecast, you end up exposing yourself to a situation where if your macro story doesn't play out, your downside risk is in some regards and in many cases higher than your upside potential. And we want to obviously avoid that situation at all costs. So that's in part why we structure our portfolio differently. Now, that brings us to the story of sort of global atomic. But let me back up actually once more. Another important sort of factor or variable in this that arises from that asymmetry is that it makes the price at which you buy in all the more important because the commodity prices are so uncertain and there's so much volatility in them. That purchase price ends up being essential. So Warren Buffett's idea of, say, buying a good company at a good price doesn't work very well in commodity producers or liquid real assets, at least on the equity side. In private equity, if you control the asset, control the cash flows, it's a little different. But in equities, you really want to be very careful to always be buying, at a fairly steep discount to what you think the net asset value might be worth to account for that possible negative asymmetry. So that brings us to sort of the global atomic story. Now, I find most uranium investment theses quite flawed. They tend to be a headline story, supply and demand imbalance. Now, as I said, I find that to be insufficient for an equity investment. Again, commodity prices explain only 50% of the producer's equity performance through cycle. You have no timeline associated with when the supply and demand imbalance will produce a run in the commodity price. So you have no way of of really putting an expected return on the investment. So it's insufficient in my mind. Add to that the fact that when you make a commodity price bet via an equity, you are increasing the risks you need to take into account. You now have fundamental company risks you need to take into account. And so rather than making an investment that has torque and reduced risk, you're making an investment that has sort of a negative asymmetry in the risk profile and the payoff profile, and increases the number of variables you need to take into account. So our philosophy demands a fundamental company-specific thesis with predictable catalysts. And in the absence of that, we won't make an investment. In the presence of that, and in the presence of negative macro, we will make it. In the presence of a positive macro scenario, we will also make it. So with the case of uranium, we've had trouble finding investments or opportunities where others have plowed in because the only story was the supply-demand imbalance story. Now, that changed in 2019 when Kazatomprom IPO'd in the London exchange. Kazatomprom is the world's largest producer of uranium. It is a state-owned company in Kazakhstan. We made an investment in 2019. In 2021, we exited the investment with a 240% return, while uranium prices rose only 20%. Other uranium miners did fine, but they did not produce a 240% return. That was driven purely by valuation. When Kazatomprom came out and IPO'd, I'm going to get the numbers slightly wrong, but directionally correct. I think they IPO'd with something like a 13% dividend yield, just to give you context. And the ability to produce uranium at something in the $15 to $20 range when it was trading at around $40 a pound. So it was just misvalued in a very traditional sort of way. That changed over time as proof of concept, if you will, that they could continue to produce, et cetera, played out. So after several further years of watching the market, we stumbled across Global Atomic in 2023. We were aware of the company before, watched it, but didn't do anything. And in 2024, we made an investment. Now, it's a particularly interesting story now because the catalysts that we identified are quickly approaching. There was a significant mispricing of political risk, and there is now a favorable, or there remains a favorable backdrop at the macro level. And so there is an opportunity, perhaps, for this year and next year to get that very rare opportunity where you have both the fundamental catalysts appreciating or coming to bear, and the macro backdrop being quite favorable. And the results you get when you see stuff like that is like the gold industry last year, where gold prices ripped. A lot of gold producers were in very healthy shape with their balance sheets. They had managed to get costs under control after a difficult period with inflation in 2023 and 2024. And you saw a lot of 100+% returns. Some percentage of that was company level, and some percentage of that was the gold price. The hope is that perhaps this year, next year, we can see something similar happen with Global Atomic. But the opportunity in Global Atomic arose from political risk and remains because the political risk is misunderstood. So this is a stock chart of Global Atomic stock. Global Atomic, ticker symbol is GLO. It trades on the TSX. This is in Canadian dollars. Just to go through sort of the timeline here, the company found and started to develop this asset, which is called DASA, in the late 2010s, 2017, 2018. They got their first mining permit in 2020. The Nigerian government mining code requires a 10% carried interest in all assets. They gave them their carried interest in 2021. And then in 2023, following the first democratic transition of power, which occurred in 2022 in Niger, there was a military coup. And as you can see on this chart, when there was a military coup, the stock took a dive. It then rebuilt, and then the Niger government ended its relationship with the US military in 2024. And then in late 2024, mid 2024, they revoked the mining license permits for two large uranium miners developing assets in the country. That revocation has been talked about extensively as a nationalization of those assets. As I'll sort of discuss, it's a lot more complicated than that, or in some regards, it's a lot more simple, depending on sort of what side of it you come down on. The opportunity is found in really understanding a lot of the politics that is going on with the Niger government. Now, this is also an interesting idea for this community, I think, because we're all interested investors who are willing to do work.